Hello, everyone, and welcome to another edition of the Smart Investor Market Show, where smart investors get their up to date price analysis and market information. In today's episode, we're going to take a look at the defense sector. It's an area that has been doing fairly well over the last couple of years, and we're going to take a look at a number of defense stocks and look to see whether we believe there are buys, sells, or holds. We'll also take a look at the markets. The Fed minutes uh, just came out a while ago, and we see some movements in the currencies. So we'll take a look at what the market is doing at this point in time, and and generally S&P 500 is still below the all-time high. This is the after the huge, well, not huge, after the sell-off we experienced last week. This is the fourth day of recovery, and the market is still struggling to rally at this point in time. Could this be a sign of exhaustion, or could this just be the market settling down before another leg up, or could it be the beginning of a longer term rally? That's what we're going to analyze here. So, what is a point that I would say for the S&P 500 that if we do close below this area, that could mean some trouble. Okay, once the market remains above, let's just take a look at this chart. Once the market remains above 2004.25, 2004.66, I believe the panic button wouldn't be pressed. But if we start to close below these lows here on the chart, the 2400 and the 2350 level, and ultimately the 2325, if we start to close below these levels on the chart, that could signal that we are in for a much wider sell-off in the market. So if you are looking at the price action, not on what the pundits are saying, if you are looking at what the price is telling you, then these are the areas I would be focused on. So firstly, this 2400 is the futures chart, the E-mini futures for the S&P 500, 2350 and 2325, all areas of interest. And the thing is, a lot of market participants will be paying attention to these areas also, especially like how we are in the month of August, which tends to be fairly volatile. Let's look at the Dow Jones Industrial Average. The areas on the chart are not as clear cut, but if we do decline below the 21,000 level, so let's just see 21,000, 2,500, and if we dip below 20,200 or so, these are three areas on this Dow chart. If we breach below these areas, that could signal a wider sell-off in the value of the Dow, and we could even get into the 19,000 or 19,500. Now, the real test of the rally is if we sell off and get to these levels, will we find support and head back up, or will it be the start of something much bigger? Reading a lot of reports, a lot of people making predictions, and there are a lot of things people are saying about the market crash. They're saying that the bubble is bigger than the 2008 housing bubble, and this crash will be the mother of all crashes. Uh, the thing is, every time the market goes up, folks may say that. But let us just let the price action determine that, and or the price action give us early warning as to when a decline may happen. But for now, the trend still remains up. There is no doubt about the trend being up at this point in time. But just keep an eye out on those important levels that I spoke about. Okay, taking a look at the overseas markets, or just to recap, right now, as of this recording, at 3:26 p.m. Eastern. The Dow is up 27 points. The Nasdaq is up 9. S&P 500 is up 3. So the markets are just treading water. The Russell is down 2 and the VIX is down 2.57. Now, let's take a look at the chart of the VIX. We see a recovery after a huge spike up. You see how volatile the VIX can be. This was this huge spike up that occurred last week. The market went up and has settled back down into the 11 region. 11 is still historically very low. Just recall 2008 financial crisis, the VIX went up to close to 100. And in 2015, when we had that sell-off, the VIX went to just above 50. So we're still fairly low in the VIX. Looking at the overseas markets, the German DAX, we see that DAX still remain on a downward trajectory. This is a minor downtrend occurring in the DAX. If we start to close below that 11,500 or close below 11,500, that would be very worrisome for that market. Taking a look at the FTSE in over there in England, market holding up nicely in tandem with S&P 500. We have seen a slight recovery here in the FTSE, and resistance is up at that all-time high near the 7,600 level. Taking a look at the US dollar index, dollar index was fairly quiet until a couple of minutes ago when that report came out. The US dollar index is down on the day at 93.55, and what we could be doing is the dollar may actually try and challenge this 93 level on the index. Looking at the euro is at 117.88, and the uptrend in the euro still remains fairly constant. Taking a look at the Japanese yen, we have a recovery in the yen since last week. The yen got rejected up at these levels in the 92 region, but we're seeing some recovery in the value of the yen. And if we do rally, the market has to take out that 92 level. That will give this market some clearance to be more bullish. Okay, taking a look at gold, all important gold, and we have copper soaring today, but let's take a look at gold. We have a recovery in gold, and gold, similarly with the Japanese yen, the market just has to take out these resistance levels in the 1300 region. If we take out these levels, then it will be very positive for gold, and it will mean that the bulls are more in control of this market. Silver, the market is looks more uncertain at this point in time, because this market has to break this series of lower highs and lower lows. I think that if we do rally in gold, that will take silver above this $17 or $18 level, and we could see a recovery in the value of silver. If we do take out the $18 level, silver definitely, if it enters another bull market, has some room to grow, and as you can see, it's historically low. It's just at 17 after topping out in 2011 or so at just close to $50. So this market, if it really starts to come alive, has some room to move to the upside. Okay, looking at the copper market, copper up sharply today, 296 on the futures market, and as you can see, copper, it's rarely talk about metal because maybe it's not really a precious metal, But the copper prices have been in a reluctant uptrend ever since bottoming out in 2016. This is not really a strong uptrend because, as you can see, the market was in a fairly significant down move, but the market broke that down move and is currently seeing some higher highs, higher lows, and we just have to wait to see if the market can move up further. Crude oil. Oil market is down sharply on the day, and it's good to cycle through the various markets because, for example, looking at the crude oil market, looking at the gold sector, looking at some of these commodities, you can get an idea of what sectors in the stock market may be doing fairly well. Now, this energy sector, we did a lot of or we reviewed a lot of energy sector stocks yesterday. So if you didn't see yesterday's show, you can go back and look at it, where the energy sector stocks were just doing poorly. They were in strong declines. And one of the main reasons is that the oil market, oil prices just have been stagnant over the last couple of years. So we have this sideways movement in oil, meandering between $30 and $60, and thus when the S&P 500 and the major indices are rising, energy sector stocks are doing poorly. Okay, so moving on to what else interesting is going on today. Some of you do cocoa. Agricultural commodities are down generally today. Not most of you do agricultural commodities. If you would like me to review them more often, you can send me an email, info@smartinvestorcentral.com, and I can review them. Remember, you can subscribe to the channel so you get the latest market analysis. Subscribe button is either below this video or above the video. Subscribe to the channel so you can get the latest market analysis, price analysis. Notice on this show, we really focusing on what prices are doing and not giving you a lot of the news spin. I mean, you can turn on any show and get the news of the day, the financial news of the day. But what we're doing here is focusing in on price action. Okay, so we have looked on the markets, the broader market, and now what we'll take a look at is the defense sector. A lot of you have been wanting me to review some of the stocks in the defense sector. So here we go. The first one I will look at is Lockheed Martin. Has done very, very well. I know a couple of people who said that they have been holding on to this stock for quite some time. Let's just take a broader look at this stock. As you can see, it bottomed just at $60, and we're currently at $305. So almost a 500% move since that move down in 2009. Huge rally, huge move up. And when I'm looking at stocks to buy, this is what I like to see. I like to see higher highs, higher lows, the market moving up steadily. Now, this is a stock, and this is something I like to see when you're buying stock. There's a tendency for investors, for example, let's say when the market was at 109, they may say it has gone too high and they may be reluctant to buy. But it's at this point in time where I believe it's very good to buy, when the market is rallying, not when the market is declining, when the market is actually rallying. So Lockheed Martin doing very well. I would hold this stock at this point in time. Defense looks good. Defense almost always looks good in the face of war and talk of war. And let's just take a look at the stock from 99. This is a stock you could have really just held on to. From 99, it went up to 120, back down to 60, you would probably have taken some profits there. And when the market bottomed in 2009, a huge move up. So Lockheed Martin looking good. If it drops below 275 or 265, I'll definitely be looking to exit and take some profits off of this position. Okay, let's just move through the list. We're looking at the defense and aerospace industry at the moment. Now, the other stock I want to look at is Huntington. Daily. Okay, what's the first thing we do? Let's look at the broader picture, the monthly, the weeklies, and we can see that this is in a rising uptrend. Now, it's encountering resistance up at this 220 level. So this is definitely a level you have to pay attention to, because if we fail at this level, then we could see a slight sell-off in this market. So this is something that definitely keep an eye on. This market is still in a bullish move. Now let's take a look at escape. Let's get that off the screen. And again, notice we're just looking at the price action. I'm not looking at, I can tell, and it's hopefully you watch this show, you can get to a point where you're just looking at a stock, looking at the price action and saying whether this is something that you would want to buy, sell, or hold. And as you will notice, most stocks that we want to be holding on to and buys have this nice upward trending movement. This stock has been around for a while, and the market really took off in 2009 to around $40, and we're currently at $270. So nice rally in Northrop Grumman Corp defense sector. I know this is widely held among folks. The next one is, and you can see that this is just almost the complete opposite of what we saw yesterday. Yesterday the charts were dreadful, and anyone holding on to some of the stocks we spoke about yesterday, I cringe and I feel for them, because the losses probably are just piling up. Now Raytheon Rtn, another market that is in a very smooth uptrend, and another market that is doing fairly well. So this is something I will hold. If the market drops below 160 to 150, that will be cause of concern, and probably will be good to take some profits off the table. Naturally, it depends when you got in. Okay, and your time frame. Let's take a look at Rockwell Collins. COL. Rockwell Collins, again, doing fairly well. Market is in an uptrend, and in the last month or so, we have seen the market really accelerate from 110 to 125. So it's making new highs, and it's doing fairly well. This is definitely a stock to hold on to at this point in time. Notice a sharp increase from 105 up to 125. After such a sharp increase, you normally get some cooling off. Market participants cool off before probably another leg up in the market. So the sector on a whole is looking fairly good, fairly solid. Let's take a look at TDY. And normally on the show we try to cover as many stocks as possible. Remember, there are thousands of stocks out there, and we just can't cover a few at a time. We can't cover everything, but just looking at some of these stocks, hopefully, you are getting an idea of what we are looking for and the what a favorable chart pattern looks like. Okay, so TDY, Teledyne Technologies, another good stock. It's at $146, and we have seen a fairly good uptrend since 2017. It has moved from 120 to 146, so it has been ticking up nicely. It hasn't been soaring or booming like Rockwell Collins, but the market is still fairly positive, and I would say that this is a hold. Now let's look at L3 Technologies, Triple L. This is a stock I actually recommended buy a couple of about a year ago, I believe, and the market has really done fairly well from 120 to 180. So 50% move since that buy signal came up, or the market came on my radar for a buy signal. So very strong move to the upside, and I will still continue to hold this stock. Jonathan, my assistant really did a very good job of finding just very strong looking charts at this point in time. And just remember, the markets are up. The markets are doing well. So the majority of stocks in your portfolio should have charts similar to what I'm pointing out. If you have a portfolio of 15 stocks, hopefully the 15 of them have that nice upward trending move and has done fairly well. If you have a stock that is moving down steadily, probably it's best to exit that stock. Okay, let's take a look at Hexcel Corp. Market is trading at new highs or near new highs for the year at the $55 level. But what we need to see in this stock, we see this channel developing. We want to see the stock punch above the 55 or $56 region. So we want to see the market punch above. Things remain fairly positive. I would say if you enter somewhere around here, put a stop loss around the $48 level, and hope or look for the market to really punch to the upside. If it hits 48, get out. Key to investing is normally just cut your losses short and let your profits run. So try and keep those losses very small. I know investors do the opposite. They let their losses run and the psychology behind that is I can understand. I've done it many times in the past. You get in at $53, it drops to 48. Let's say you put your stop loss at 48. It drops to 48. You say to yourself, okay, let me just hold on a little bit longer. It's going to come back. It drops to 46. You say, okay, if it just gets back to 53, which was my entry point, I will get out. The stock falls to 42, stock falls to 38, 32, and you're still holding on, trying and anticipating the market will recover. Sometimes the market never recover, and you realize a huge loss. And that's how folks let their losses really accelerate to the downside. And on the opposite hand, the stock, they enter at 53, the stock goes up to 57, let's say it goes up to 60, and then folks normally or sometimes just take that quick profit. They don't let their profits really run and rank up to the upside. They take that quick profit because the mainstream media has stated that a small profit is always desirable. A small quick profit is always desirable, and that is definitely not true. The way to invest and the way to make money is let your profits run and cut your losses short, because many small profits, you have a huge loss that can wipe out your small profits. Okay, Let's look at TXT. TXT. Textron market is near its high for the year, but it's not near its all-time high, and this is one of the weaker ones in the sector. And yes, it has recovered. Yes, it has recovered since 2009, since 2012. But when stocks have this overhead resistance, sometimes they can be fairly risky. If I was holding this, if I own this stock, I would still hold on to it because this at this point in time is a hold. But this resistance above is a concern, because what you will find is that every time the market rallies, it will you will have sellers selling into that rally, to take profits or get out, especially the folks who bought up here and they're just waiting for it to come back to break even, to get out. So this is still a hold, but a one of the weaker stocks in the sector. Final one we'll look at is General Dynamics. And what's the symbol here? It's GD, I believe. Just based on experience. Yes, confirming GD. General Dynamics market moving up nicely, and see the difference between this and the previous stock, where there's not much overhead resistance. The market is at new highs, and it is moving upward fairly nicely. And so this is definitely a fairly good stock, and I will recommend a hold on this. That is what my system is saying. It's saying to hold this stock at this point in time. Yes, the market can change, the market can turn around, and that's why we pay attention to the markets every day. Just because I say, okay, this is a hold, you it doesn't mean that in the next 2 weeks it's a hold, or next month it's a hold. At this point in time, it's a hold. But that doesn't mean, okay, next week or next month it's a hold. Because things can change, price action can change. And that's why we pay attention to the markets every day, or at least every week. Look at the markets every week to see what's happening in them. And then, especially if things turn around, and we have been rallying for a number of years, things may turn around, and it's folks who pay attention to their portfolio and pay attention to what they're doing, who will get out and even profit from the decline, because there is a way to profit if the market declines. And it's not about shorting stocks or anything. There are sectors that may move up or will move to the upside, so it's a matter of just exiting the ones that are going down and rotating into the ones that are moving upward. That's a basic principle. Okay, thank you very much for listening to the show. What you can do is subscribe to the channel. If you have any questions, send to info@smartinvestorcentral.com. Thank you very much for listening, and I hope you have a wonderful day. This is Beyond signing out.